Hey traders, welcome to Charts and Coffee. Well, Charts and Espresso, but it doesn't quite roll off the tongue in the same way. Hope everyone's doing great. We are embarking on FOMC minutes today. Meeting minutes are not like the FOMC decision on rates. So for those of you that are new to this hot zone, obviously rate decisions come with some sort of decision as to hike, hold, or cut rates. They come with a statement, and then later there's a press conference. Okay. Today, this is looking back on the previous meeting, but now we get to see the discussion, right? The minutes, the notes, right? Now we get to see what was discussed. And the reason this is important, right? You might say, Rob, we already know what they decided. Yes, but sometimes there are dissenters. Sometimes there are sort of conversations that were happening that might foreshadow what we're going to see later on in the year. And that's particularly relevant because this year we still have a September meeting, we still have a November meeting, and a December meeting. September is a pause. So unless something absolutely catastrophic happens with inflation where it ticks up monstrously and the Fed has to hike in September, we're going to pause in September. The Fed's going to take October off. And then they start to ask themselves, what, if anything, do we need to do in November or December? And sure, they could pause, but there's a pesky possibility. There's a pesky possibility that they could hike another quarter point. So where else do we go? We can look at the Fed fund futures and look at all those probabilities. The probable outcome for the remainder of the year continues to be a pause at the remaining three meetings, but there's a possibility of a hike in November or December, and just a quarter point for the most part. So then we take a look at something like bonds. Bonds are saying that yields are going higher. That's the basic thing. Why they're saying that is really up to speculation, analysis, hypothesis, whatever, right? Overall, yields are going higher. Some folks will say, obviously more sellers than buyers. Why are yields going higher? Some folks will say that the bond market, which loves to play a game of chicken with the Federal Reserve, is saying, y'all are ending too soon. You need to hike one more time. Inflation is not under control. We disagree with you. I mean, everything can be boiled down to we disagree with you, and we're moving rates where we think you will have to move, right? So it's really a game of chicken. And so bonds are telling that story. Another place we can look is the euro. The euro is the best place to understand what's going on with the US dollar. And the euro is heavy because the US dollar has been moving higher. Now, why would we look at the euro? This is something that I teach in the mastery, right? If we understand that even the US dollar basket is a high concentration weighted index of currencies, not stocks, right? Of currencies, 58% of it is this thing. It's the euro. So the euro's heading lower, dollar's going to be heading higher. But the euro's sitting at a spot where if there's going to be a shot for the euro to catch a bid, this would probably be the week. So we're looking at some potential oversold buys in the euro. So that's what we've got coming up. This week. So there's your quick 5-minute rundown of what's on the agenda for today. It is a caution day. Be careful. We saw sort of the caution day creep into the close yesterday with a little bit of front running. So these pre-FOMC minute moves where traders said, hey, you know what? I'm not sure that I want to be long the indices in front of the minutes that could reveal that the Federal Reserve is more hawkish, right? So that's what we've got going on. And you'll notice here on the left, I've got the beginning of the notes that we'll be working with once I'm in the Sector Secrets Mastery. So if you haven't checked out what we are doing there, sectorsecrets.com, and you can see what we're doing over here in the Mastery room. We're actually pretty flat going into, we have one position going into the FOMC today, but for the most part, what we're waiting for is our aftermath trades. What does that mean? Let the Federal Reserve come out and say whatever they're going to say via the minutes, and then we'll see what sets up in the aftermath of that. So really no different than the way that I would tackle, say, earnings. And we've had some really nice winners in Johnson & Johnson in XLC, and those were closed yesterday. And then at this point, we'd like to rebuild our swing trading and then go into some more day trading, right? So that's going to be pretty cool. It's events like this that could set up the next set of trades, that next batch, that next round of trades. So I look forward to events like this, not because I want to bet on what's going to happen, right? I want to use what has happened to see if it closes the distance to levels that we want to get into. So as always, gang, feel free to type in those questions, and we'll go ahead and let's see here. Either everyone's waiting for the caffeine to kick in, although we have a lot of folks tuned in. Thank you so much, as always, on the YouTube, both my YouTube channel, Twitter, the Simpler YouTube channel. Great to see you all. Either the caffeine's waiting to kick in, or everyone's just sort of hesitant on FOMC. All right, feel free to type in those questions, gang. We'll be here for another 12 minutes. So let's go ahead and jump into a couple more charts, all right? While everyone gets those synapses firing. All right, so if we take a look at Amazon, right? Let's take a look at some of the key stocks in these sectors, all right? When I take a look at something like Amazon, we have been looking for opportunity inside the daily price movement range of Amazon. And it continues to be a relative outperformer in terms of the trend, right? Now, this is one of the tools that traders have in the Sector Secrets Mastery. There are a number of indicators that come with the mastery. This tool at the very bottom, let me grab my drawing tools here. This tool at the very bottom is what we call the multi-trend. And it's a process of looking at 4 moving averages. Their structure dictates the top row is momentum, the bottom row is trend. So we have a trend in Amazon. Now, let me contrast that with, how many of y'all remember those books back in the, would have been the early 2000s, Eat This, Not That? Don't remember that? You know, I want a bag of Cheetos. What's a really good alternative? That kind of thing. I like the concept of that compare and contrast, because that is watch list building. And trade this, not that, to me is the way that comes through. So I don't want to really mess around with Apple. I don't want to really mess around with Microsoft, right? But look at Meta. It's holding its own a little bit better. Okay, that's interesting. What about Google? Holding its own a lot better. What about Amazon? Holding its own a lot better. This is the relative performance process. So if we take a look at the NASDAQ, we've got a question here. Is the NASDAQ good on short the rips? Maybe on a 5-minute time frame. Tommy? Right. So the question is the NASDAQ good for a short on the rip? Right now, take a look at a few things. We are trading below the previous session close. We're not quite to the previous session low. So those previous session levels are very important. There are some sort of the best markers for where we are in relation to the psychology that preceded today's session, right? So if I've got a red trend, and take a look at the structure of the 5-minute, if I've got a red trend, yeah, I can look for some short the rips. The question is always to where. Tommy, I like to use the volatility levels of the HPMRs. It's a tool, it's a process that I created where we can look at historical volatility and plot support and resistance on a chart based on it. So I'll look for the HPMR levels. Tech Trader Joe says, do I see any sectors that we should be looking in reference to a start or return to the trend? I would stick with the relative outperformers. You know, it doesn't have to be tech. You know, if we take a look at things like energy, energy's in fuego, right? It might be pulling back, and I would love to have a piece of this. XLE. You take a look at home builders and home construction, XHB, ITB. They're not as directly correlated to the NASDAQ and the S&P, but they're a little bit more to the Dow, Regional banks have been quite resilient. Even financials relative to say XLK, XLF has been resilient, but it's had a tough couple weeks between a little lethargy and also some downgrades. So moving on from XLF, I look at XLV. XLV is coming back, quite interestingly enough. If we're concerned about downturn, then what about maybe not XLP, but relative outperformers in XLP? So those are places we're looking right now, Trader Tech Joe. Those are where we are building trades. So, in this environment, can you find opportunity that could take us 1 to 3 days on a short-term swing? Absolutely. We've been doing that pretty consistently. But even more so than that, is the day trading allowing us to pick maybe an hour or two, maybe three specific hours, specific day trading windows per day, per session, and find opportunity there? Yes, that's been working too. So everything really sort of comes back to shorten the time frame or time horizon for swings, and also focus on being very nimble. Day trading is not about hyperactivity. Day trading is just about saying, I'm going to use a short-term time frame to get in, to get out before the close. That's it. That's it. And then a lot of other concerns about day trading is, well, I can't sit in front of my computer all day, Rob. You don't have to, right? For me, I like to at least present a possibility, a window for some traders to say, Rob, I've got an hour on the open before I've got to go to work or before I have these other responsibilities. And my thought is, great. But if you have 2 hours, we can open the window. If you have a third hour for the afternoon, once again, we can open the window. So you can choose where you want to be in that. This is such a funny thing. I was talking to somebody when I was in an Uber not too long ago, and we were talking about day trading. I said, yeah, we pick our windows. The Uber driver said, so do I. I choose when I want to work based on when I know I can get the most rides. I said, yep, that's kind of what day traders do too. We don't have to trade all day. We can choose those specific windows where the opportunities are most ripe, right? So those are all things that I'm looking at in terms of sectors, but sectors and then timeframes. I think both those things are really important. Kevin, how are you? SLV. Sure, silver has been a really interesting metal. SLV long calls. It's oversold right now. I would prefer the long calls be built inside the gray zone of the DPMR, and maybe as well as getting a minor low. The other thing I can do is use SI, silver futures, as a proxy. And if we do that, this is actually the first minor low that we have seen with the confirmation, I believe, as of 8:15. So this is looking potentially pretty interesting as an oversold minor low pattern setup. So good risk reward. Minor lows definitely give us the opportunity to keep a tighter stop. So yeah, good, interesting look there, Kevin. I appreciate that. Would I look to PG to pull back for a long call entry? PG. All right. Procter and Gamble is one of the relative outperformers in staples. So yes, that is a yes. I'm with you on that. Lieber, yes, I'm with you. Pull back to where is the question, right? We could use the DPMR. We could use a minor low. We could use a 34 EMA wave as a mean reversion. That's another thing we could do. So I could just pull, and I don't keep the wave up as much because mean reversions have not been as common. But let's say I go ahead and put the wave on here for a moment. And I love the wave, gang. The wave's been on my chart for decades. But when we don't have mean reversions to the wave, what did I do to my chart here? When we don't have mean reversions to the wave, our alternative is to look at the volatility support. So there's XLP, which is not looking good. So please be careful with some of the relative outperformers within XLP, because they could run into some trouble. But we do have a mean reversion setting up. Remember, if the tide is going out, meaning XLP is going out, some of the boats like Procter and Gamble are going to have to work very hard to fight that tide. All right, Glenn, thanks for the question, Lieber. Glenn, my thoughts on a pairs trade. I don't do pairs trades, my friend. Not a fan. I either have a setup that I like the direction on or I don't. So I won't be a lot of help for you there, but I do want to look for eventually a long position in bonds. However, that's going to continue to be tricky because bonds, again, are front running a narrative of the Federal Reserve probably does need to hike one more time. That's probably what we're seeing a big part of there. But yeah, my friend, I don't pairs trade. All right, next up, XLE. Yeah, we're getting there. We're getting there, Jim. Crude oil's been on a tear. Yeah, crude oil's been on a tear. I love if crude's moving higher. I love when I see XLE moving higher with it. OIH, XOP. There's a lot to like here. Yes, for sure. But as far as the buy, there are some interesting levels we could be dealing with if we get a little bit more weakness. We're going to open up around 87.60 something this morning. It could be an aggro buy setting up. It could be. Yeah, no doubt. Is crude oil going to be affected by the FOMC? Not as much. Not as much. But we definitely want to keep an eye on it. All right. FinWest asks, contact the office, FinWest. If you have any question about that, feel free to contact the office. The best book I read, Day Trading, is related to Japanese candles. What we do is chart work and research. Yep. All right, moving on. Do I have a long-term portfolio, Dividend Kings, that are separate from my trading account? Tell me, we do. And every Tuesday at 3 p.m., we review the weekly time frames in the macro. And yes, we have a separate portfolio that actually the bulk of it has been built, say, Q3 of last year. So those are slow moving, right? We look at them all year long. We look at them once a week. We ready ourselves for those opportunities, but they're not opportunities that present themselves weekly or even monthly. They're going to present themselves sporadically through the year. But we have a really, really powerful portfolio that we've built in things like XLP, XLK, XLB, and the portfolio is up. Yeah, the portfolio is up, which is nice. All right. Let's see here. Next up. Yeah, if y'all have office questions about what to do with your account, gang, Charts and Coffee is not where we address them. Feel free to contact the office, simplertrading.com. All the information is there. All right. Would I play something that has earnings catalyst like Target? No. If I'm going into earnings or ex-dividend date, things like that, D. Bolton, no, I do not believe in playing a binary, earnings are today, so let's put on some kind of spread and, see if we're right on. No, negative. I think that leading into earnings, there are more and numerous and lower implied volatility setups than setting up this binary scratch off lottery ticket, right? If I think about what's going to map out to consistency, following trends into earnings, playing those trends into earnings with stopping before the release is really the consistency game, right? Versus kind of, the one hit wonder of, can I get that scratch off lottery ticket play on volatility? Yeah. So I pass. Yeah. That's a hard pass. That's a hard pass for me. All right. Next up, Mark asks, yep, that Ted Williams strike zone. Yeah, we bring that up a lot in the mastery. That's absolutely my favorite discussion in Becoming Buffett, when Buffett talks about the circle of competence. Absolutely. As far as XLRE or VNQ, yeah, right now that's going to be a little bit of a wait and see there. Oftentimes these can be a little bit more defensive, but defensives haven't really caught a bid. All right, so I'd be a little careful there. Okay, gang, that's a wrap. As always, thanks so much for being here for Charts and Coffee. Same time, same station tomorrow. Be good to each other.